は知能たけしさん、ヤコブ・クロンビヒラーさん、柳沢力也さん、そして、モデレーターはキャロライン・ヨークさんです。テーマは CBDC 対ステーブルコインです。Next, we'll move on to the panel discussion. The panelists are Mr. Takeshi Chino, Mr. Jakob Kromhila, and Mr. Yanagisawa, and the moderator is Caroline York. The theme of the discussion is CBDCs versus stablecoins. Now, please begin.
Thank you so very much. And once again, thank you, EDCON, for having us today at the panel. So we have our introductions already. Should we just jump straight into the conversation, gentlemen? Or do you want to say a little bit about each company?
Sure. Hello. Thank you for having me in this great panel. I'm Takeshi Chino, currently with Binance as a CEO of Japan Business. Before that, I worked for another crypto exchange called Kraken, and then I was also the CEO of the Japan Business. I mainly came from TradFi, starting career at Tokyo Stock Exchange and worked for them more than 10 years. Yeah, so my career is a kind of mixture between TradFi and Web3.
Fantastic, thank you. Over to you, Jacob, a little bit of brief intro.
Thank you very much. My name is Jacob, and I'm the founder and CEO of Clearpool. Clearpool is a on-chain private credit marketplace. We've been around for 4 years, and we've done about $900 million worth of loans. We're mainly focused on sourcing liquidity for stablecoin-enabled fintechs, mainly in the payment space. And my background is in that too, in fintech actually.
Thank you for having me for today, and I'm Ricky, and I came from Bitgo. I'm the director and the head of Japan for Bitgo sales in Japan. And a little bit of my backgrounds, I came from a bit different from those guys. So I came from the IT sectors more, like Bloomberg. So I came a bit from the traditional finance, but now into the cryptos.
Thank you so much for the introduction. And I'm Caroline York, your moderator for today. I'm the marketing director at Serotonin, which is a Web3 marketing agency. And we help exciting projects such as all those here on stage go to market. And one of the hottest topics right now I think, in the crypto sphere is actually stablecoins. We have the latest stablecoin regulation that came through, the current regulations, and I think Japan is going to come out with their first ever private stablecoin as well. So, considering that this is the current climate, this topic talks about a war between CBDC versus stablecoins. Do you see, and this question is open to all the gentlemen here on stage right now, do you see it as a zero-sum game where one must actually replace the other? Or do you think there's actually a hybrid coexistence that could happen? So maybe we start here with Takeshi-san.
I personally not quite sure whether there is an ongoing war between CBDC versus stablecoin business. In my understanding, CBDC is just a replacement for paper money, and mainly I think circulated among big banking institutions and also big corporations. But when it comes to retail business, I don't think central bank or government institutions have intention to kind of take a leadership in the retail business. Rather, they let just some private sector to do the business whatever they want. So I certainly predict there will be a coexistence of CBDC if central bank decided to issue, and also stablecoin, which is mainly issued by the private sector.
Thank you for that. Now, Jacob, this question is ongoing for you as well. For a retail person, why would we choose to use a stablecoin versus a CBDC? Like, where are the use cases for either or of them, or are they mixed?
Yeah.
Are they the same?
I think in general, right, we need to point out that currently it's not really a choice that most retail people have. Currently, the market is dominated by USDT and USDC, right? That's a fact. And I don't think as a retail person I'm giving it too much thought. As a retail person, I choose whatever I can use on Binance, for example, right? So currently the adoption is with private stablecoins, and we actually see that probably there's going to be a lot more stablecoins coming out, right? We saw Amazon and Walmart are even considering launching their own stablecoin. I think all the big fintechs probably going to launch their own stablecoin. I think PayPal already has one. Stripe is even launching their own chain. They already have one internally. So there's going to be a lot more stablecoins coming out, and I think even within those stablecoins, now those stablecoins are regulated to a large extent, right? So you have a regulated stablecoin. You have like Tether just launched a American regulated stablecoin. So even within the stablecoin landscape, there's quite a lot of differences. And I would say, in a way, I don't know, there's maybe a bit of a misconception that most stablecoins are completely permissionless, because also there you have regulatory oversight, you have programmability, the issuers can basically freeze your funds, etc., etc. So retail is going to use whatever is going to be the most adopted, most liquid, and the one with the most use cases. Currently, this is obviously private stablecoins, and also stablecoins that if you want to use DeFi, you need something that is on a public blockchain. I believe most CBDCs are intended to be on private blockchain. So there are those kind of use cases that aren't even open for the normal retail investors. So for now, there is basically just USDT and USDC for most retail users, except for some smaller ones. But that's the bulk of the offering.
Perfect. Thank you for setting the scene. And I think as we pass it over to Ricky here, we will talk about then what is the real use case then for CBDCs? Where are we seeing the opportunity and maybe some of the challenges?
What we can see from the CBDC is still like there are a lot of POCs going on, and only limited number of CBDCs in production at this moment. But what we see, like in the conceptual level, is the central banks and also government. What they want to use CBDC is more for the keep having the control over the monetary policy. So when it comes to the stable coins, that's backed by the real asset. Still, if the government if they want to enforce the policies, then they have direct power if it comes to the CBDC. When it comes to the payments, actually, I don't think there's will be a lot of the differences from the stablecoin and CBDC. But in case of the real use case, I think the stablecoins from the private sector, they can have much faster innovation, and also the more real use cases around the stablecoins. So still, I think the central banks, they need to look for how they can expand the usage, real usage within the sector for the CBDC.
Okay, thank you for that. If we could just pass the mic all the way back through this side again. We're gonna start on this end. So, Takeshi, we are now talking about, from Binance's perspective, and I think Jacob laid a very good groundwork on that. Retailers are not given much choice. It's just whatever is currently on the exchange, right? But how do you see that evolving? As these regulations are changing, we're also seeing different currency denominated type of stablecoins. What is your or Binance's perspective and prediction for what will happen in this space?
Well, it's very hard for us to predict everything happening in the future, obviously. But I think we should clearly state that our position should be neutral to any type of project. We don't champion one stablecoin or a particular project over another project. So when it comes to stablecoin or CBDC, whatever a market or players prefer to use, we are open to listing these projects, to our exchange platform. So obviously, Tether, USDC are more widely used at this moment, but we are quite not sure whether the regulatory changes or more political reasons or specific countries' initiative, there might be something new happening in the future. Then, as Binance, we are happy to accommodate any type of new offerings to accept these like new innovations.
Right, and I guess in terms of CBDCs, then it also be accepted onto the platform.
Yeah. When our country decided to issue a CBDC, then why not we just to accept that one for payment purpose. But our stance is just let the market decide what kind of like currency, what kind of type of project they prefer to use.
And what kind of insights are you seeing currently from the users, existing users, right? What kind of demand are you seeing for these stablecoin usage?
So interestingly, like stablecoins, I'm talking about stablecoin at this moment because no major countries have issued a CBDC yet. Stablecoins, the people who want to use stablecoins are mainly for like DeFi protocols or just depositing and withdraw or everything they want to complete on the chain. Not relying on the traditional financial institution. That's the main purpose for them to use stablecoins. But currently, we are seeing a growing demand for payment. We have a payment service Binance Pay, which is widely used in African countries, especially, and using the like QR code, and the people can pay for their daily goods, for example. But they use stablecoin for such payment purpose. So that demand is growing at this moment. But when it's come to major countries, I read the news in the States like restaurants are currently accepting stablecoin payment, but in Japan particularly, not that movement yet. Yeah, so a lot of like regulatory restriction we have unfortunately, but hopefully in the someday the Japanese regulator decided to get rid of that kind of restriction so that retail players can use a stablecoin for day-to-day kind of payment purposes.
Thank you for that. Okay, on to you, Jacob. So, we were discussing a little bit about the use case for stablecoins, for a DeFi lending protocol. What are you seeing in terms of the space, and how do you think if CBDCs were to become more popular, we don't know if that is going to be the case, but how do you think that would actually affect all the DeFi lending protocol space as well?
Yeah, I think, as a protocol, we take a similar stance as Binance. At the end of the day, we would accept whatever is commonly used, right? So as long as there's a demand, we don't really favor USDT, USDC, a new Ripple stablecoin, or potentially even a CBDC, right? Personally, I've never really interacted myself with a CBDC, and I think that's why there are some questions about that. Are those even are they operating on public blockchains? Probably most are not intended to do so. So there is this, right? That would obviously not work with any DeFi protocol already to start with, right? So I think the big observation is that obviously now there are multiple stable coins, but there's mainly obviously USDT, USDC. The dollar is the dominant currency, right? 99% plus is dollars, and and the US already said that they basically clearly went with private stable coins, right? So in a way, judging from that, you would think that this battle, as you call it, for now it's definitely going into the direction of the private stable coins that are just going to grow further. And the dollar is obviously very powerful, right? As you mentioned, there's also emerging markets. They're using stable coins not just to transact and to pay, but also to hold. There's a positive correlation between countries with inflation and stablecoin usage. You just want to hold the dollar, and then you want to deposit into dollar-denominated yield products versus your currency that devalues every single day or year, right? And then for global trade and for of trade. Like the dollar really became the dominant currency. So I think I don't really see that changing.
Even with all the Asian stablecoins coming through as well.
Yeah, I think global trade in general is still mainly dollar heavy, right? So it's not even a DeFi. It's not even a DeFi only thing right now. But there's definitely going to be more usage for local currencies, I would say. As soon as the stablecoins are not just being used for DeFi and trading, but as soon as stablecoins are entering everyday's life, obviously a merchant, a person here still needs to transact and live on Japanese yen. So there's going to be usage for those activities. But I would say overall DeFi is probably going to stay heavily reliant on dollar-denominated private stablecoins.
Got it. All right. We'll circle back around because there are some other interesting questions that we can actually talk about in terms of what retail traders currently in the space are utilizing stablecoins for, what they are actually leveraging stablecoins for, different types of strategies around in the area. We can go on a little bit on this, and then I'll move on to Ricky-san there.
Yeah, just very shortly, I think once you have stablecoins, there's a lot of different yield products on chain. So it goes from tokenized T-bills all the way to tokenized private credit funds or trading strategies. And I think the big unlock with DeFi is higher capital efficiency. So you can use this stablecoin-denominated yield assets as collateral to loop them usually on those DeFi protocols, and you basically are getting a much higher interest rate from that. This is something that is quite DeFi specific, and this is driving a lot of the current DeFi adoption. I think this is the big unlock. You can get higher risk-adjusted returns versus investing in the non-on-chain market.
Thank you for that. All right, over to you, Ricky-san. So, as a custody player in the space, what are some of the fundamental differences, or maybe even some challenges in providing secure custody for a stablecoin? It should be a stablecoin for the moment, but also, we're going to throw CBDCs in the mix. What kind of factors are you considering when providing custody for these assets?
So actually, from the custodian perspective, there's no differences to how we secure how we implement security for CBDC and stablecoins, because it's not about the asset but more for the governance and operational control. So when it comes to the real risk arise is let's say if the central banks or the government, if they demand more of the customization DNA from the current best practice we have. So I believe every custodian we have best practice in the company from over the years of experiences. But if the clients they demand to change it in terms of the governance or operational flow, then it can be the risk, because it's not something we consider as the best practice. So depending on the regulations or the requirements, that can be this part as well. But other than that, to manage CBDC or stablecoins or even other cryptos, the essential point for the safeguard the asset, that's quite the same for any assets.
So going into this conversation, because previously CBDC, central bank digital currencies, and I think with the Web3 ethos that we have here, privacy has always been of key concern, right? We haven't really touched on this topic yet. So in terms of privacy, are we looking at stablecoins as getting more and more similar to a CBDC as the regulations kind of come through? What are your opinions on this, on how to safeguard customer privacy, for example, when utilizing stablecoin assets or CBDCs, so to say? Do you have thoughts on that one?
So one thing I need to emphasize is as a custodian, we don't have any control over the client asset or the client data in a sense. So we cannot do anything on the client's privacy or the data related to privacy. But it's more the control over the issuer side. So let's say if the issuer wants to embed the phrasing asset or the mechanism to control over the asset when they issue the stablecoins or the CBDC, then those those operations will be done by the issuers, not by the custodian. We are just safeguard to the asset, and we do the operation on behalf of them. So we don't do the proactive control over the client asset or the data. So I want to emphasize that again, the custodians, we don't harm the client privacies, but more it's the control by the central banks.
Got it. I mean, this is a little bit of a question also for Binance on this side as well. How do we kind of balance privacy and sovereignty over your own data when all of this money that's become fully regulated, and also that you could be whitelisted or blacklisted on using them as well?
Yeah, that's a great question, and that is one of the hottest topics in the industry, I think. Yeah, so I think currently data privacy isn't a kind of big issue among regulators at this moment when it comes to a stablecoin regulation. Their main concern is over money laundering or kind of financing, kind of terrorism kind of thing. So we have travel rules which require licensing exchange to kind of require users to designate the destination of the fund, just like we have traditional banking institutions. We needed to designate where the fund is going to. The same rule has already been applied to cryptocurrency transfer in the major countries. And a stablecoin is another exception from the travel rules. So we do need to comply, but it isn't like the government controls everything, every kind of funding flow of the private sector. But the CBDC, if the government or central bank wants to monitor and control the trading flow or funding flow, they can technically enable to do that, right? So I think a stable coins, I'm not quite sure whether the government try to control every single activity in the market, but I don't see that kind of move is happening now. But CBDC, they may want to do that kind of thing.
So interestingly, because there are so many regulations coming out for stablecoin issuers, I think what we're seeing also is perhaps the stablecoin issuers are self-censoring themselves before even the government regulations come through. So they also act almost like a little bit like a CBDC in a way. Now, we had this really interesting conversation just over at lunch, and I actually want to learn a little bit more about your thoughts, perhaps over to yourself, Takeshi, and also Jacob and Ricky. Would we be also seeing a rise of, we wouldn't really call it, similar stable coins to like a USDT, right? Where the boundaries are a little bit more vague than a one-to-one peg. Would those you also see as people will still have that demand for it, right? Curious to hear your thoughts, if you guys have any.
I perceive that less and less space for such kind of stable project to thrive in the market at this moment, given that the major countries' regulators are moving forward with regulatory kind of framework for stable coins, issuing and distributing businesses as well. So, like Japanese financial agency, they once told me that they will never allow USDT to be circulated in this country, given that there are unclear kind of management or unclear investment while they try to be transparent. But for the regulators, they don't want to have such a kind of uncertain kind of operation in the regulated world. So I don't think there will be more that kind of project coming up in the market.
There is certain risk associated. Jacob, what are your thoughts on this?
I think I agree. I think most users of stablecoins, whether that's retail, institutional, are actually quite happy with having regulation in place for the backing of the stablecoins, right? Obviously, there are the extreme ends that everything is being monitored, etc. But currently, just as the stablecoin regulation basically just tells the issuers that they need to be backed, and I think everyone sleeps better having a lot of money on stablecoins if that's the case, right? So while there will be always use cases for maybe something that is slightly less regulated, I do think that the biggest adoption is going to come from this regulated stablecoin, and it's going to go outside of, I would say, this it's a little bit like back in the days, I guess everyone really cared about to hold their own seed phrase, their own keys to their cryptocurrencies. But when you really go mainstream, the reality is probably most people they don't wanna self custody. They don't wanna have the responsibility to not forget their seed phrase and then potentially lose everything, right? And I think it's a little bit similar with money. Actually, having regulatory oversight, having clarity, having guarantees is a good thing, and especially as stablecoins are now moving away from just being a trading instrument to actually being the new financial rails, right, for payments, for basically everything, right? Stocks and bonds are probably going to come on chain as well. Everything's going to interact with stablecoins. As that grows, I would say we're going to move towards a more sort of like regulated path. Yeah.
So Ricky, I guess as we continue to round up this panel, the question here then would be, as Jacob was mentioning, there's more and more people who might actually give away certain types of sovereignty over data or sovereignty over anonymity for ease and convenience, right? And how does Bitgo kind of play that role for the upcoming, I would say, the stablecoin wave that we're seeing happening?
So as a Bitgo, we provide B2B mainly, but what we see in the market is even the high net worth individuals, what they're looking for is more on the custody, and that's not only for the ease of using the services. So as Jacob mentioned, they don't want to forget what the custody is, or they don't want to manage to do the self custody. But it's more for what they're looking for is more security, and also in a sense, insurance. So custody, as custody, we cannot do any instance. But when it happens, something just in case, they can be assured or they can feel more comfortable if there's an insurance. So I think all the custodians we provide insurance, although we have never had any insurance. But those individuals and also the B2B players, they look for the most secure way to having the assets as well as to prepare for something happens in case.
Yeah, and I think, as a custody player as well, there's definitely much more stringent guidelines on making sure that all these stablecoin issuers actually do have their one-to-one backed assets in hold. How are you guys monitoring this? What interesting new innovations have you guys got coming out? I'd love to hear a little bit about that.
So for the Bitgo, we do support for the USD1, so which is the stablecoin security in the US. What we provide is not only the custody, but also making money and also treasury management, reserve management, those systems, so that we can ensure all the stablecoins works as planned, as designed, and we provide the security for the backed assets as well.
Yeah, so I guess all in all, stablecoin issuers just have a lot more hurdles to go through, but it is for the safety of all the public adoption that's going to happen. We have 30 seconds left. If we could just quickly round up, one sentence on saying, what are you thinking that excites you the most within this stablecoin space in the coming 12 months? Let's start with you, Ricky. What would it be?
for me, especially for Japan, so a lot of stablecoins are in the project phase right now, and we see some banks proactively working on the stablecoin project. So I expect we're going to see the JPY stablecoins coming in the future and distributed in the market.
Exciting. To you, Jacob.
I think the fact that we now have real world use cases outside of crypto native adoption and trading is very exciting. Payment is the first big use case, but now that more and more people are holding stable coins, it will also be basically setting the basis for adoption of other tokenized RWAs, right? So you have any type of yield products, stocks, bonds, and who knows in the future, other illiquid assets maybe also going to come on the blockchain. So I think we're at the very beginning, and but it's going to accelerate very quickly.
Fantastic.
Yeah, just continuing from what Jacob said. So I think a stablecoin will be having more CBR competition among stablecoins. So like market selection phase is coming up. And that one will be going along with the tokenization of traditional financial assets. I think we will be having more traditional financial assets, bonds, and equities. Everything can be tokenized and available on chain. And the stablecoin will be used for settlement of such tokenization activities.
Thank you so much to all our panelists here. I guess the war for stablecoins versus CBDC might no longer actually be a war. So great harmonizing future ahead, and I wish you all the best for the coming afternoon. Thank you, everyone.
Thank you.
Thank you very much.